here. You are at the Flexible Home Financing Solutions for Credit Union Members webinar here with TGUC Financial, our newest partner here with CUCollaborate. Super excited for you to learn more about how we're working with this incredible organization to help credit unions achieve their strategic initiatives. My name is Ben Herring. I'm the Director of Partnerships with CUCollaborate. I've been in credit unions now for coming on 14 years. I used to work for a credit union up here in Minnesota. I live in Minneapolis, and that is where I work from. And throughout my time, have had a lot of different experiences in the credit union movement. Prior to joining the CUCollaborate team, I was at the league up here, the Minnesota Credit Union Network, and among many other hats and roles and opportunities, I got to not only lead engagement with the league, but also got to start a new credit union, a de novo credit union. But in my role with CUCollaborate, really focused on leveraging organizations that are doing wonderful things out there in the community with credit unions so that we can move the needle. And as we're talking about credit unions and the way that we partner with organizations, I just want to give you a little bit of context around who CUCollaborate is. I see some familiar names out there, but for anyone who is unaware, CUCollaborate, we are data and analytics CUSO. We became a CUSO last year. We have about 14 credit unions who've invested in our organization. I'm really, really proud of that. Our sole focus is really around credit union growth, and so maximizing impact and performance for our clients is of utmost importance. We do so by leveraging our proprietary data as well as technology that we've built to provide drive strategic decision making that's smarter. We're also able to leverage a lot of talent on our team, so we have deep subject matter expertise across our various lines of business, and use that as a differentiator in the consulting space. So, three main areas of expertise: growth, performance, impact. As I mentioned on the screen here, you can see all the different things that we do. Some of our bread and butter products and services are field membership expansions and charter conversions. That has allowed us to really help credit unions with their growth strategies, branching strategies, building out products, helping them with their consumer marketing and branding efforts, et cetera. And then on the impact side, and a lot of what we're going to talk about here today is around beneficial regulatory programs that can support credit unions' mission. So the CDFI certification, the low-income designation, and providing analytics that helps track and monitor and help you move the needle on those initiatives are all things that we do. When it comes to how we partner with organizations in this space, and so a lot of the work that we do is strategic in nature. We can develop out plans for credit unions all day long, but at the end of the day, we're saying, hey, you need to maybe boost your lending in CDFI areas. Well, we're not a lender, and so we need to partner with trusted organizations out there that can help our clients do those things. And the way that we do that is through our software. So as I mentioned, we build all of our own software, and we have now extended it out to organizations that want to take advantage of the opportunity that exists with these beneficial regulatory programs. And so our newest partner here, I'm really excited to announce TGUC Financial. Gerald Tuchman is joining me today. We're going to have a conversation around some of the things that we're thinking about, how we're partnering together, but really want to focus our conversation today on how this partner of ours, our newest partner, is helping credit unions achieve their goals on things like the CDFI certification and reaching members across underserved areas and our lower income communities. So with that, I want to hand it over to our partner over at TGUC Financial, Gerald Tuchman. How are you?
I am great. Thanks, Ben. That was quite the level set, my friend. All right. So thanks everyone for joining. I'm Gerald Tuchman. I'll briefly just give you a bit about my background and try and tell you a bit about TGUC. And to echo what Ben said, please, along this whole process, ask your questions. If you're more comfortable asking them, after, I'm sure, or at least I hope we'll share contact information But the real objective is to make this as informative and as helpful for you as possible. So again, I'm Gerald Tuchman. I'm in New York, and I've been in New York since I was 17. I went to NYU, and I worked in M&A directly after at Lazard at Rockefeller Center. Worked in management consulting for a few years after, and then worked across a number of commercial and product teams for a few startups, primarily fintechs. And the most recent venture was a company called Pagaya, which is now public. I met the founder of TGUC Financial at Pagaya and was blown away by the capabilities of the platform at that time, and now have the fortune and really the privilege of being able to be a part of the team. And so TGUC Financial, in a nutshell, is a B2B2C fintech platform that is purpose-built exclusively for the home improvement industry. So as we speak today, there's over half a trillion dollars being spent a year in home improvement. Roughly 60% of that is financed, and there's a large chunk of that is coming more and more towards the point of sale. And that's really where we operate with our hallmark offering. And so we try and offer flexible, affordable payment options to homeowners when they're at the point of sale, looking at windows and doors, replacing HVAC systems, replacing their roofing. We try and be there with a very convenient, easy to integrate technology for the contractors. That represents a really, really great opportunity in a number of capacities for credit unions who are looking to provide access to financing to homeowners in their communities. So I'll pause there, and I'm sure we'll dive more into a number of things from here. But that's me and TGUC in a nutshell.
Fantastic. Well, thanks for that, Gerald. And we're actually going to take a pretty unique approach to this particular webinar. I really wanted to keep it as engaging as possible for you and open it up so that you feel like you can jump in too. So we're actually going to explore through a conversational format how credit unions are navigating some of the economic uncertainty that's out there. Many different reasons for that, of course. But we want to really focus it on how credit unions are navigating this experience that we're having today while continuing to grow their membership. Not only that, but meet their CDFI impact goals, lending goals, and deliver really lending solutions that matter most to members at a time that is most relevant to them. And so we're actually going to use a Q&A format throughout today's webinar. So as we mentioned, feel free to drop in with questions in the chat. We'll certainly also save time at the end to get to as many as we can. And then, of course, we'll love to follow up with anyone who has more intimate questions that they'd like to ask us. So let's go ahead and just jump in, right? So, Gerald, let's start with kind of like a big picture overview of what we're looking at here today. We mentioned economic uncertainty. What are you seeing out, in the kind of like the macro level environment that credit unions should be maybe paying attention to?
Yeah, it's a great question. So I think there's a number of ways to look at things right now. So right now it's unique because we've got a lot of tariff noise, which is hopefully to some degree quieted down. It certainly has in the markets, at least in the past few days. So I think of things. Listen, we focus on home improvement, so I think of kind of the home improvement industry. And where that is, and I'll tie that into a number of other factors that really affect all lenders. But as we speak today, the average home in the United States is 44 years old, which is the oldest it's ever been. We're moving more and more towards an infrastructure that's going to look a lot more like Western Europe, which is appropriate versus based on where we are as a country. Our population is also aging, which means that there's going to be just more and more of a need on both sides of the equation for there to be repairs, for there to be accessibility upgrades, for there to be maintenance. This is just where we are as a country. While that's happening, mortgage rates are hovering around 7%, and you've got the lion's share of homeowners locked into pre-COVID rates, so they're not really incentivized to move. And so, to speak specifically about the housing market, it's certainly unique times. And for us as a lender, we are really prioritizing providing capital to what people need to not only be comfortable in their homes, but to exist in those homes, right? Think of HVAC in the summer and winter times. They're pretty critical things. So macroeconomically, to answer your question, kind of more zoned out, there are a number of leading indicators that people are looking at that I would say at this point mostly point to a logical conclusion of uncertainty. So, the general narrative today as we speak is nobody really knows. The job market still looks strong with recent data. Credit deterioration hasn't really fallen off a cliff in the way that some people anticipated in recent months, et cetera, et cetera. And so there's quite a bit of conflicting data. But what we do see is, house, the average savings rate for the average house, that is down. There are certainly pockets, particularly in the traditional and kind of the money center bank part of the financial community, where there is already tightening in anticipation of possible credit deterioration in the back half of this year to start to creep up. So it really depends on kind of where you focus. But as a lender, and particularly as a credit union, I do view this as a time of opportunity. And I say that because as a credit union, you really have, the mission and the trust of your communities. And you really have the ability to lend at rates that in many cases are just much more favorable to their fintech alternatives. And this is the time to really deepen those relationships and proactively reach out and let people know that you're there to help. Because I think this is kind of the rubber meets the road moment from traditional lenders, real mission-driven lenders, and those who really prioritize margin over everything. Margin growth, et cetera, over really being there to be a valuable solution for their consumers.
Right, and I think that's something that we talk about a lot in credit unions is, one, we're people helping people, we're not for profit, we're really focused on delivering as much value to the member as possible. And there's kind of this saying in credit unions that we have to balance the mission versus margin. And so when you're thinking about it in terms of how credit unions are balancing growth initiatives with who they are as an organization, can you tell us a little bit more about how you think credit unions should be expanding their lending without drifting too far away from their core values or mission?
Yeah. I mean, it's wildly important across a number of partnerships. So I think one channel that makes logical sense is to look at partners, first of all, that align with your mandate and that align with what you're trying to do in your community. And so if you're looking for, stability, for example, if you're looking for member service, if you're looking for organizations that are specifically looking to serve underserved communities, for example, then home improvement as a space and TGUC as a partner might make a lot of sense. It's really going to depend on, I think, your awareness and your prioritization of your own initiatives and your own ethos, and applying that to your partners and really kind of canvassing and seeing how people line up. It's certainly something that we take very seriously at TGUC. It's something that we're really proud of, and this, Ben, with CUCollaborate, it's really the driver of the partnership, and it's because we care about offering valuable solutions to Main Street. Yes, a partnership with us will be marginally accretive. Everybody will make money. It's definitely going to be a win-win. It's easy to integrate. We can start slow and grow. I can touch on all the things that make it an incredibly beneficial economic partnership. But it also really provides the ability for us and for credit unions to deepen relationships in communities where they really struggle to do that for a number of reasons. So that's something that we're really excited about scaling, and really is the kind of primary driver for this conversation, to be honest.
So, okay, so then one of the things that we mentioned, of course, CUCollaborate, we're in the CDFI space, a lot of questions around that, but let's talk about that specifically. So how does this partnership help with credit unions looking to meet their CDFI goals or maybe to attain certification? Can you tell us a little bit about how that's working on your side?
Yeah. So in a nutshell, there's really two kind of off the shelf, if you will, partnership models that we could deploy with the credit union. And so one is, as a CDFI, you want the majority of your lending to be to those underserved communities. You may be struggling to do that today organically. Your membership base may be shrinking or not growing as quickly as it was previously. Maybe there's encroachment from competitors. There can be a number of drivers for that. And so having a growth partner that can lend in your market under your guidelines, using your credit policy with a risk tolerance that you're comfortable with, while growing your membership, that's obviously very valuable. And so that direct model where we, TGUC, can work directly with you and offer your loans in your markets under your terms. So that's kind of option number one right out the gate. And that's certainly a way in which we partner today across a number of institutions. Option number two is that you can purchase whole closed loans. And so, maybe it's the end of the quarter or the year and you're doing a review and you realize that there's an imbalance. There may be an opportunity there as well. And so it's really on either side of the equation.
Okay, so we have a lot of credit unions that are focused on member growth. How does this approach appeal to the new membership growth component? Can you talk about that?
Yeah. I think it's interesting. So there's a few different ways to answer that. One, I think, is particularly in consumer finance, and I do consider credit unions to be a part of consumer finance for your members, and I certainly hope so. So it's interesting because you want to engage. We're living more and more in the world of Amazon and Google, and just everything is at your fingertips, guys. And so it's so important that you engage where there's a point of need. And so when you're talking about new members, in the example of, I'm just going to call her Michelle, Michelle, who is a mom with 3 kids at home, and the AC goes out for her house in the middle of the summer, and she finds a contractor, and the contractor shows up. And scenario one, listen, she can afford it, but it's going to really crunch her numbers for the next few months. And in scenario two, there's an incredibly affordable payment option with reasonable terms that are not going to even come close to overburdening her. And that could be your institution. But if you don't have a solution at that transaction at that time, you don't have the ability to be a part of that solution. And so it's really, to me, about bringing your brand and your the value that you provide, bringing it forward and embedding it more and more at the points of need where people are really looking to get access to credit.
Yeah, I mean, I think that's something where, credit unions, oftentimes I talk about in terms of high touch. And so, thinking about it in terms of how does this actually help your credit union achieve high touch without being right there with your member at any given moment. This potentially could be, kind of one of those ways in which you can be there without having to actually physically be there in a moment when they need it most, right? So jumping a little bit on some specifics, want to get down to kind of some of the logistical items. Like, what does a typical loan look like that's coming through this model? Tell us a little bit more about what you're seeing coming through your channel.
Sure. So we lend up to 100,000. Our terms go out to 15 years, And the lion's share of what we do is focused on home improvement essentials. And so it's the trade lines that I've named recently, which are HVAC, windows and doors, roofing. We'll do bathroom and kitchen remodeling. What we don't do today are things like solar, luxury pools in your backyard, ADUs. We don't do kind of Airbnb or Verbo or any type of commercial use loans. It's all lending specifically to homeowners who occupy the residence. And so that's where we are today. And really, I would say the important piece to keep in mind as a credit union is that, we work with you to structure a program that's specific to you. We're not, an off-the-shelf partner program. It's all tailor-made to suit your needs and what you are trying to achieve.
And so then when I hear tailor-made, I think of, well, one, that's amazing that you can craft it to the organization. I think, any credit union you talk to is going to say that they have a differentiator among any other credit union. So that's an amazing thing. But I think it also sometimes can translate to complex.
No.
So
Yeah.
thinking about that, like, how does that, what's the lift? Like, tell us a little bit about that.
Sure. No, it's lightweight. So, really what we do is, we're gonna understand mutually what we're targeting commercially. And so what does that buy box look like? What are your goals? What's that specific market that you're looking to get? What's the ideal kind of loan profile and borrower profile that you want to target? And logistically, I mean, we can move as quickly as the credit union moves. We've gone through these processes in less than a month. So it's from a tech implementation perspective, it's very, very light. We can send files daily. We make sure that everything is incredibly open and transparent. We're an organization that's fairly easy to do diligence on. We have a lot of things that are ready to go off the shelf. And so we make it pretty easy and pretty fast on both sides. And we try and stay flexible to just make sure that we're informing you guys and educating you guys along every step in all the ways that are just very specific to home improvement. And that's not something that every credit union has a deep moat of experience in necessarily.
Yeah, and you mentioned due diligence. So that's kind of like the other side, like operations is one side. I mean, I think this is probably in line with what keeps you up at night for any credit union CEO and any credit union leader is risk, right? So from a risk standpoint, how is TGUC Financial thinking about that? And
yeah. So first of all, it's a loaded question, and I appreciate it, Ben. And obviously a wildly important one in the world of lending. It's multi-pronged is the answer, right? So at the highest level, we're looking at macroeconomic risk, a lot of what we just touched on. We look at leading indicators, we look at adjacent trade lines, we look at all types of credit performance. We do modeling and look at a number of factors. I would say what's not necessarily unique, but certainly the way that we think of it when you're thinking of a TGUC loan and the value that we can provide on either a risk-adjusted basis or purchasing it, it's really that, and I think the easiest way to think of it is compare a personal loan to a TGUC loan. And so I think that risk profile kind of lays it out in a very helpful manner. And I say that because a personal loan is general use, right? We don't know what the money is being spent for. A TGUC loan is for a homeowner who's occupying a residence who's doing a need-to-have project. And so why is that important? It's important because it's either, what we're doing effectively is we're helping a homeowner either maintain or increase their investment in their home, okay? So we know that that's what this money is being used for. And so what we're gonna do is we're gonna underwrite for due diligence or assess the risk of the homeowner, the project itself, and we're gonna do that by verifying home ownership. We're gonna ask the homeowner, are they happy with this project? We're gonna make sure that we ask the contractor the same. We're gonna make sure that it's complete and that everything's verified. So we're gonna verify the project, the homeowner, and we're gonna underwrite the contractor. And so we really do what I call a 360 risk assessment of everything associated with that loan and that homeowner and that contractor. We look at permit data, we look at all types of things. So we do we have a very comprehensive suite of verifications that apply to every project that flows through our pipes. And so we think of risk first. We are a very risk first organization. Our management team is all from a number of lending institutions of scale, and so we certainly think of risk a lot, and it's what we'd like to believe is one of our differentiators.
Okay, so as we're going to start opening this up, one thing I want to make sure that we hit on before we get into kind of some open format Q&A. What is one thing that you think credit unions aren't thinking about today that they should be?
Wow, yeah. I think the biggest theme that is without a doubt a huge part of the future of finance, even though it won't look and feel that way, is embedded finance. And I've kind of referred to it, but that general theme I think is really important for your institution to be thinking about, because less and less people are going to be coming into branches on a net basis. And so your ability to meet people wherever there is a transaction, commercially, on the consumer side, certainly, but just meeting people in a very efficient and smooth and frictionless way, while still giving them the option to connect with you with the white glove service that has made credit unions as amazing as they are historically. That approach and that frame to me is absolutely critical. And I think it's that lens and that adoption of growth that's going to really determine kind of the next generation of the top players versus some who may not be able to grab as much scale. It's just really thinking of, where is finance happening today? And more often than not, the answer to that is outside of the lending institution.
No, I think that makes a lot of sense, and I think it's really kind of I've been talking about different models of embedded lending for a while now, but it seems to be that there's been level of concern around the model, but also I think that it's something that's going to come with anything that's new, and anything that we do differently, right? And so how do we make sure that credit unions are going to be the premier lender for our members? I think of this, especially if you're really focused on how to extend your services out to your broader community. This is, I don't know, I think this is one of the best ways to go about it, of course. But so I want to open it up. Please do provide any questions, comments that you have in the chat. There's a Q&A section if you want to drop your questions there, or you can just put them right directly in the chat. Had some kind of questions come through from some other credit unions that we've been working with. So wanted to make sure we touched on those as well, which is many of these relationships that we have are, we need to be able to customize them to the credit union, right? And so slightly different buy boxes, slightly different rules and criteria for lending. So can a credit union in this model set their own underwriting criteria, their lending parameters? How does that work?
Can a credit union set their own lending criteria? Is that?
Yep, and underwriting criteria.
Their own underwriting criteria. Absolutely, yes. So that is the expectation. We have no intention, nor do I think it's advantageous to either party to push the credit union to do something that feels unnatural to them in how they lend. And so again, we'll share the data. We'll show you guys, kind of where we lend today and how we think about it. But at the end of the day, it's your program, and we want to make sure that you feel comfortable. And so we approach that to provide comfort in a number of ways. One is making sure that it's your policy that you're very, very happy with. But two is that we often start very, very small. And we allow you to kind of, get comfortable, see the performance, and then over time we grow the partnership.
Yeah, I mean, I think, okay, so when it comes to working with contractors, is there like a typical contractor profile that you work with? Or, I mean, obviously you mentioned you're catering these to credit unions individually, and many times we'll hear of credit unions saying, hey, we have a particular strategy. Maybe maybe we have set groups that we serve, and we want to maybe build something like this into that package, or we just want to be able to provide these services to businesses in a particular given area that we're focused on right now. Is there a contractor profile, or how does the merchant component work?
Yeah, so we're national, and there's a contractor portal that contractors can enroll directly in, and then we due diligence them through that. Is there a typical contractor? No, it likely sounds cliche, but no, there is no typical contractor. There's certainly an enrollment criteria, right? And so we don't do business with absolutely everyone. There's certainly a stringent criteria that they go through to get underwritten. I mean, you have to have a physical address, you have to be in business for X amount of years, so on and so forth. And so that's a big piece, frankly, of the risks associated in the home improvement lending space, is really deeply understanding not just the project type, right? So think windows versus doors versus roofing, but equally as important, understanding the nature of the contractor that's doing that work. And so yes, they do vary in terms of where they focus, what their national presence looks like. But there's certainly, they all meet, certainly pretty strict minimum standards. And then once they enroll, we also proactively manage those contractors throughout the program to make sure that we're seeing, the type of work that benefits everybody. So yeah. But listen, if there's some contractors in your area that could use a solution to help, I mean, please feel free to let us know, and if we can be helpful, we're happy to.
So, I mean, you mentioned that you like to start small. Are there any minimum volume commitments, or what does the initial commitment look like?
Yeah, not in concrete terms. I think it's really about alignment between our institutions in terms of how you're looking to grow, what you're looking to allocate long term, how you're thinking of growing, and I mean institutionally growing, not just from a pure home improvement lending perspective. And we like to align with where we see companies that want to grow in the right direction, and they really understand the type of impact that we want to help facilitate as well. So the short answer is no, there's not really a hard requirement. We just want to make sure that we're building the type of programs that's going to provide real value to both parties, or in our case, all three parties.
Last one I have coming through here for right now. So can credit unions then market this type of a product directly to their members and do so like on their own?
The short answer is yes, you absolutely could. Yeah, I mean, it would really be a part of your offering. And so absolutely, yes.
Well, that sounds great. No, I think that when it comes to strategies and like wanting to provide our members with the products and services that make most sense in your given communities, most of these credit unions have a field of membership, a reason why they were started in the first place, and I think they like to share this opportunity with not only those within the community that aren't members of the credit union, but also those that are. And so I don't see any other questions coming through the chat or Q&A section. So I'm always open to and wanting to provide some time back in people's schedules. So before we adjourn for today, would love to give you like a moment to just, what do you want to send credit union, the attendees home with today to think about?
Yeah. No, I appreciate that. First of all, thanks again for everyone who's taking time during their workday to spend time with us and learn more about what we do and kind of our perspective on the space. What I would hope people leave with is that there are financial technology companies who are really thinking about ways to grow that are risk first, not growth at all costs first, that are really thinking of ways to partner that are not only economically accretive, but that have real potential to do good. Not just in, across the world in this esoteric way, but in your real communities. And we take that seriously, and we think that there's just an enormous amount of potential for partnerships like this, and we're excited about that potential. And we're really, really interested in partnering with institutions that want to provide real valuable solutions at the point of need in their communities. And so if that resonates with you, if you think that's something that appeals to your institution's way of thinking, we'd be happy to have the conversation. I would hope that in addition to TGUC, I would also hope that people kind of walk away with a reinvigorated sense of how important credit unions are to Main Street and Wall Street, and how much of a part of the financial ecosystem of this country they are, and how much of an opportunity you have as a credit union to be a part of the really kind of go forward world that we're all going to be living in, where there's just going to be so much more embedded lending. There's no reason for you guys not to be a big piece of that. You have the mission, you have a lot of trust, and there are really viable partners to help you continue to leverage and scale that infrastructure to support that need. So thanks again, Ben, and thanks everyone.
Yeah. We actually, not to throw you a curveball, we actually do have another question coming through the chat.
Okay. Sure.
How do you secure your home improvement loans?
Oh boy. Okay. Yeah. So what we do is we file UCC-1s, is kind of technically how we secure it, quote unquote. There is a full and robust legal recovery strategy that's all the way on the tail end. The first thing I would say is to re-anchor on all the ways that we look at risk long before it gets to the point of recovery, right? Keep in mind, this is not general purpose. These are homeowners who occupy their primary home, who are getting things done in their house that in many cases they need done, and who just want an affordable payment option to help them do that. And that's what a TGUC loan represents. And that's also why it really has very different economics than you might expect from other types of quote unquote point of sale lending products. And so we very much focus on this space, meeting people where they have this need, and we don't really do anything else.
That's great to hear. No, it really seems like it's a mission focused, not only offering, but a company, and I'm glad that we're able to be in partnership together. I think it really says a lot when one of your clients came to us and was like, you need to partner with CUCollaborate, and CUCollaborate, you need to partner with TGUC Financial. That's usually a really good sign in the credit union space that there's something here. So before we go, want to say, actually, before I say my sign off here, but Joe, could you drop your contact information in the chat just in case if anyone wants to follow up with you directly? So as you're doing that, we'll provide some follow-up materials with the follow-up email tomorrow, including the recording of today's webinar, which again you may share with anyone who's interested in learning more. We'll have my brief slides, and then most importantly, contact information and meeting links for following up on today's conversation with more in-depth and specific conversations around how you might partner with TGUC Financial to provide more flexible home lending solutions for your members. So,
forgive me for cutting you off there, Ben. I don't think it's letting me in the chat, but I will say it out loud, old school. So I'm G Tuchman, TUCHMAN at TGUCFinancial.com, and feel free to shoot me a note.
I got it. I think.
Thank you, sir.
So with that, please do reach out. You may reach out to us directly or Gerald and his team to learn more. And all that to say, we're very thankful for you joining us today and looking forward to serving you in this partnership on into the future.
Absolutely.
Thanks, Gerald.
Thanks, Ben. Thanks, everyone. Have a good one.